Welcome to BD Daily Finance News Podcast, your daily briefing on finance and investing. It's 2025, December 24th, and today the markets are doing that festive thing where stocks smile for the camera while gold quietly steals the spotlight.
It's like the market showed up in a Santa hat and also a bunker. Equities are like cheer, and gold is like just in case.
We'll hit 3 stories in 6 minutes. U.S. stocks near record highs into the holiday break, gold punching through the big psychological levels, and Asia's read-through. Hong Kong stocks up, plus a China Robotics IPO move that tells you where capital wants to go next.
The S&P is flirting, gold is proposing marriage, and Hong Kong is texting, "You up?"
Story 1. U.S. stocks are holding near record highs heading into the Christmas break. That matters because late December is often seasonally strong, but liquidity gets thin, so prices can drift up or gap on small surprises.
Thin liquidity is basically the market on vacation mode, right? Like fewer traders at the desk, so one big order can tip the whole punch bowl.
Exactly. Imagine a busy highway versus a quiet side road. On the side road, one truck changes everything. In markets, that means stop losses trigger faster, option hedges can amplify moves, and headlines feel louder than they are.
So if my portfolio is the car, I shouldn't speed just because the road looks empty. Got it. But why are stocks still so perky if everyone keeps saying rate cuts might not be immediate?
2 big reasons. 1, earnings optimism. Investors are leaning into the idea that profits can hold up. 2, positioning. Many funds don't want to be underexposed into year-end if the tape keeps rising. Career risk is real.
Career risk is the most honest market indicator. Nothing moves money like the fear of looking wrong at the next meeting.
Actionable takeaway. If you're rebalancing, don't confuse a holiday drift with a new trend. Keep position sizes sane, know your downside, and if you're adding risk, do it with a plan, like staggered buys rather than one big Santa YOLO.
Speaking of plans, gold is acting like it has a plan, a backup plan, and a bunker membership. What's the headline?
Story 2. Gold is powering ahead. Reports have it pushing above the $4,500 an ounce area, with silver also extending gains. The backdrop cited is a weaker U.S. dollar and elevated geopolitical risk, plus markets trying to price the path of future rate cuts.
Explain it like I'm buying a latte. Why does a weaker dollar make gold look hotter?
Gold is priced in dollars. If the dollar falls, it takes more dollars to buy the same ounce, so the price often rises. Also, if investors think real yields might fall later, the opportunity cost of holding non-yielding gold feels lower.
So gold is basically the friend who thrives when everyone else is arguing about what's for dinner. It doesn't cook, but it's always invited.
And it's a portfolio hedge people actually use. But here's the caution. When headlines say overbought, that's shorthand for move got fast. If you're underallocated, think in terms of a small, rules-based slice, not chasing a vertical chart.
Yes, because buying after a moonshot is how you end up explaining to your spouse that your safe haven is now a learning experience. So Hong Kong is basically saying, fine, maybe rates don't drop tomorrow, but companies can still make money. That's refreshingly rational for markets.
China's Deep Robotics has taken a formal step toward a mainland IPO, entering the IPO guidance phase, with preparatory work scheduled through June next year. It's another signal that embodied intelligence, robots in the physical world, is becoming a capital markets theme, not just a lab demo.
Embodied intelligence sounds like a fancy way to say AI that can trip over your shoes in real life. But investing-wise, it's supply chains, sensors, batteries, and manufacturing. Real stuff.
Quick recap. U.S. stocks near records into thin holiday trading. Don't mistake low-volume drift for certainty. Gold and silver ripping higher. Great signal, but size it like a hedge, not a lottery ticket. And in Asia, Hong Kong followed Wall Street, while China's robotics IPO pipeline hints at the next investable narrative.
And if your end-of-year plan is vibes, please upgrade to rules. Subscribe for the daily rundown and tell us what you want covered next. Stocks, gold, or robot IPO season.